Tech Wabag reported a muted set of numbers in the third quarter. Strong order backlog did keep the numbers almost flat. Nikki spoke to Rajneesh Chopra, the global head of business development at the company, to find out more about the new orders and execution. Listen in.
If you see year on year for the 9 months, we are almost, where we were last year. But what I would like to highlight here is that if you see in this particular year, every quarter, because of the strong order backlog, we have been kept on improving our execution. And going forward, till March, we gave a guidance of around 3,000 crores. So we are pretty confident that we'll be able to execute 1,000 to 1,200 crores worth of order backlog. And we'll be very closer to the guidance we gave. As far as order book is concerned, we are already at 4,000 crore against a guidance of 5,000 crores. So whatever bids we have already made and where we are well placed, we are pretty confident that we'll be able to achieve our order intake guidance as well.
Sure, I just wanted to clarify, a lot of brokerages have been suggesting that your revenue guidance was 3,200 crore and that has come down marginally to 3,000 crore now. Could you give some clarification on that?
Yeah. See, we gave a guidance of 3,000 to 3,200 crores. So we definitely mentioned 3,000 to 3,200 crores.
So you're going to be meeting your guidance on the lower end this time around.
Right. We'll be very closer to that.
Okay. Talk about your order book, which now...
And as far as working capital is...
Please go ahead, sir.
See, if you look at our financials for the first 3 quarters, one of the major, improvements has come in working capital management. If you see, our debt reduction has been almost 22%, so 275 crores of the debt is something which we have already reduced. So this efficient working capital management and improved collection cycle and advances coming from the new projects, we are pretty sure that our working capital management will further improve and that will aid our execution as well. Even if you see cash flow, the net cash flow has improved and we have generated around 143 crores of cash, in this particular quarter.
All right, sure. Could you just help me with your order book right now? It's at 11,500 crore. What's the composition and what are the key projects which are expected to drive the revenue visibility going forward?
See, if you look at our order book, it's a strong order book of 11,500 crores.
Right.
And as I just mentioned, that in the last quarter, probably what we'll execute will add an equal amount of order book. So when we start the next fiscal year, probably we'll have the strongest ever order book in the history of Wabag. Now, if you look at the total composition, today around 3,364 crores is coming from India and the overseas is around close to 693 crores.
Right.
That's for a particular quarter, which I'm talking about is Q3.
Right.
So up to Q3, we are around 4,000 crores. And if you look at our total order book composition, I think 6,500 crores is what is there in Wabag, India. Apart from that, we have projects under National Mission for Clean Ganga, which has both EPC as well as hybrid annuity, which is around 1,700 crores.
Right.
And Wabag overseas is contributing around 2,516 crores. So total it's around 11,524 crores. The EPC out of this is around 71%. And O&M is around 29%. So this is the first time that we have a very good order backlog of our service business, which is operations and maintenance. And one of the key highlights here is that with operations and maintenance, definitely it's not a top line focused business, it's a bottom line focused business. So we expect a margin improvement with the execution of our operation and maintenance order backlog, which is very strong at this point of time.
All right, sir. In that case, if you expect the margins to improve, what is the kind of improvement we can see in Q4 and FY21? If you could leave us with numbers out there.
See, we never give a guidance as far as margins are concerned. So I can only say that you have seen that our margins have been improving.
So right
So
now
we believe
right
that
now
it
we
will
are
be
looking
better than last year.
right
and
now. Sir, just to put a number to it, right now we're looking at a margin of around 10% in this quarter. For Q4, can we expect a figure which is northward to 10%, or it's going to be a sub 10% kind of a number that we're looking at?
All I can say at this point of time is, since we do not give a forward-looking guidance as far as margins are concerned, I can only say is that our margins going forward will be, only get better than what currently we have.
All right, sir. Last question that I have for you is in terms of debt reduction, what number can we expect going forward?
See, as I said, we'll refrain from giving any forward-looking numbers at this point of time. But then, if you see our recent past, quarter on quarter, we have been reducing our debt, and our endeavor will be to further reduce the debt and improve our working capital. So that's something which we are continuously working on. And also, if you see in our this 9-month results, another factor is, if you see, our total cost of operations is something which we have significantly worked on, and we have improved our TCO also, total cost of operations, which has definitely resulted into better margins.
All right, sir, we'll leave it at that. Thank you so much for taking out the time and speaking to BloombergQuint.